Thanks everyone for joining us today. We're going to give about 1 to 2 minutes to let everyone get settled before we jump into the webinar. All right, welcome agents. Join us in welcoming Rudy Mell, Head of Sales at the Distribution of Farmers Life, who brings over 25 years of insurance industry experience. Before joining Farmers Life in fall of 2023, Rudy served as the VP of Sales at another major carrier and held leadership roles at the Crump Brokerage Services. With his 20 years of experience in the brokerage IMO space, he has a unique understanding of agent, IMO, and carrier needs in distribution. We are very excited to learn more about what Farmers Life can offer your clients. I'll let you take it away, Rudy.
Thank you so much. Appreciate that intro and appreciate everybody joining the call today. We're very excited to be working with NFI Solutions and doing a lot of business this year and going forward as well. So we'll jump right in. Our agenda today, we're going to just quickly talk about who Farmers Life is, the products we have, more importantly, the sales ideas around those products, and then tips for doing business with Farmers Life Insurance Company. If you have questions, please just put them in the chat box and we can answer them at the end of the presentation. So who are we? Farmers was founded in 1997 with our home office being in Knoxville, Tennessee. That's where we are domiciled. But you will find out that we have offices in New York as well, where one of my co-vice presidents, Joe Ovid, who is also on this call today, where he works out of, and Ben Cohen, or Ben Jacobs, who is the CEO, works out of there as well. I am actually in Salt Lake City, Utah. Um, so we cover a time span across the whole USA. Um, we are rated AM Best B double plus. So we had our review in December of 2023, and in January of 24 we were reaffirmed at B double plus. Our outstanding RBC ratio is 575%, which is one of the highest in the industry. So, technology we offer, our easy to navigate website is www.farmerslifeins.com. There you will find an e-app that you can use, or you can use Firelight as well, which we're available on Firelight. We do an e-app as well, a proprietary one, whether it's a MIGA or the FIA. You can run illustrations on there. You can get marketing pieces on there. You can upload documents to your cases. You can also see your case list and your commissions, everything on that. You don't have to be contracted with us to be able to enter the website. You will register. It'll take about a minute, and then you can proceed to run illustrations and everything else. So very easy technology, easy to navigate. If you have any problems, give myself or Joe a call, and we can walk you through the website. So what marketing pieces do we have? The one on the complete right earned 5.8% for 5 years. That is our client approved piece. You don't get a lot of client approved pieces out in the industry. This one is. So you can actually download that, put your name, your email and phone number, your website address, whatever you want to on there, and send it out as an email. You can make a flyer out of it and do a hard mailing if you want to. But those pieces are available out there for you to use and send to your client. The one on the left is a FIA piece. Unfortunately, that is not available for clients, but it does show how you can guarantee your client a return of 14.67% in 1 year. And we'll get down to that when we talk about the FIA. So we are in 23 states. We have filed in 18 more now, and hopefully those will get approved pretty soon. This map just needs to be updated, but we have also filed in Maryland, North Carolina, Virginia, Illinois, Kansas. We just got approved in Montana, and you can see the other states in blue that we have filed in. So, sometimes the states take a little bit longer to approve, but like I said, we have filed, and we're hoping by the end of this year that we'll be in about 41 states. So we'll keep you updated as those states get approved. So what do we offer? Excuse me. MIGA and the Harvest FIA. One thing we have decided at Farmers is to make products very simple and easy to understand with no hidden fees, no gimmicks, no hidden riders, and we'll talk about those now. So here's our MIGA Safeguard Plus. You can see we offer 3, 5, 7, and 10 year. What sets us apart is our 3 and 5 year actually do issue up to age 95. Now, our the product we're selling the most right now, most popular product, is that 5 year at 5.8% up to age 95. So some carriers will say up to age 85, you'll get a certain rate, and above that, it's less. This is what it is. What you see is what you get. The 5.8 is a true 5.8%. We also keep rates steady. Uh, you probably know last year rates were going crazy. Every second week, a new carrier would raise the rates and then bring them down and then raise them again. Our rates have actually been 5.8, or these rates for all the products have been steady since October. So we did not chase, go up to 6, 6.2, and then buy some business and then pull back. Because if you look at those carriers that were at 6.2 or what on the 5 year, they're now offering 5.2, where we've kept steady. And that's our philosophy. Rather keep steady rates than chase the market up and down the whole time. So your minimum premium on the MIGA is 10,000, non-qualified and qualified funds. We do allow for joint ownership only on non-qualified, and it has to be the spouse for joint ownership. Death benefit is the full account value. So there's no vested anything, or like I said, oh, you can't get access to your money or anything like that. If the 5.8 is 5.8. So penalty-free withdrawal is interest only after 30 days. So client wants to say, all right, I'm going to put my money in. I want that 5.8%. After 30 days, I want to start my withdrawals on a monthly, quarterly, semi-annual, or annual basis. We can do that. The product is also RMD friendly starting in year 1. So if your client exceeds the 5.8% because their RMD is higher, there is no penalty, no surrender or MBA charges because it's an RMD. So there is some confusion that people think with our 5% free withdrawal rider, which I will get to, that needs to be included. No, it does not. We do offer spousal continuation, so if the owner passes away, the spouse can continue with the policy. Now, we do offer 2 riders. The first being the enhanced benefit rider at 10 bips. So if your client is diagnosed with a terminal illness, expected death is within 1 year, or continuously confined to a qualified nursing care for 90 days, then they can access those funds without any penalty, their full account value. Now, the 5% free withdrawal rider costs 10 bips and the enhanced benefit rider costs 10 bips. Excuse me. The 5% free withdrawal rider is not relevant right now. When the rates were lower 2-3 years ago, where we had 3.5%, 4%, and clients said, what if I need a little bit more than that? That's when that 5% free withdrawal rider would be applicable, and cost them 10 bips. So the 5.8 becomes 5.7. Well, why pay for that right now when they can get the full 5.8 because their free withdrawal is actually 5.8% right now. So that's not relevant. There is some confusion. Sometimes people think they need to include that to get the RMD friendly. No, do not include that right now. If rates should drop in the next few years, that's when you, and they want more money available, that's when you would look at that. All right, let's move on to our Harvest FIA product. We have a 7-year and a 10-year chassis. We also do have a 5-year chassis. So the bonus products are only on the 7 and 10-year product. So as you can see on the screen, 7% for ages up to 75 on the 7-year and 5% thereafter. The 10-year does offer 10% bonus up to age 75 or 7% up to age 85. Now there is an enhanced liquidity package where you can get increased penalty-free withdrawals. That's for you to decide if you want that. A lot of people are not taking that because you do get 10% penalty-free after year 1. This is going to cost you 95 bips. I always say the reason for FIA is to be able to tell your client you're never going to take them backward. Now if the market returns 0 and they see it cost them 95 bips and the account has gone down by nearly 1%, they're going to be angry because we're selling this as you're never going to go backwards. So if you look at our indices that we use the S&P. We have the cap on the S&P. We have the NASDAQ 100 volatility and the Bloomberg. And I actually looked yesterday, that Bloomberg fund is up close to 9% year to date already. S&P is the S&P, right? The most popular. Excuse me, let me just go back here. Now, our Harvest FIA, if you choose to take the 10% bonus on the 10-year product, your cap is still 9% on the S&P annual point to point. That is still a very good cap at 9% with a 10% bonus. And your fixed rate is 4.25% on that. Now, as with any or most FIA product, those can change, but what we strive for at Farmers is to do a balanced product and I'll get to a sales idea in a little while, but having that balanced product is more important to us than having, a extremely high bonus, but then a very low cap. That just doesn't make sense to us. You can also see our NASDAQ and our Bloomberg. We have 100% participation if you take the bonus and 125 on the Bloomberg if you take the bonus. So what you also won't find with our products are 275 or 300% participation rate. We don't have those. Try and explain to a client how they're going to make 300% participation rate without confusing them. There's a lot of agents that I know that don't know how to explain the 300. So we'd rather just, like I said, do a balanced product than all these gimmicks and crazy things that clients do not understand and then don't feel comfortable with. So Salt Financial at the beginning of 24 rated the leaderboard, the equity only top 10 indices. And you can see there on the 1 year, that NASDAQ 100 that we use, on the 1 year it was number 1, the 3-year number 2, 5-year number 1, and 10-year number 1. So if you want to allocate to the S&P, to the fixed, and to the NASDAQ, the Bloomberg, do so. We're never going to tell you where you need to allocate. If clients want to diversify, we offer them good indices. We don't have 17 different indices in there. We just have 3 or 4 that we think are strong and will give good returns to your client. So here's the sales idea. You have male age 62, purchase the 10-year FIA. The premium allocated to the fixed account in year one, which is 4.25. The premium bonus is 10% in year one. So I'll just take a round number, 100,000. So they put in that 100,000. Now you'll see the rate of return in year one is 14.67. How do we get to that? Well, it's the 100,000. Day one, that 10,000 is allocated to the account. So you take 4.25 on 110,000. That's where you'll get the 14.67 guaranteed. They cannot go backwards. So that's a pretty good story to tell your clients. And then come the anniversary day, you can allocate to any account you want. If the market's tanking and the fixed account is still good, hey, reallocate to it or move it out and see, if they want to ride out the market. Are they risk averse? Are they risk tolerant? Are they risk moderate? That'll all be factors that will decide where they want to allocate. Now there's no fee, no charge, no spread. I said we design very basic products, easy to explain. If you have a fee, a charge, or a spread, clients don't like that. So you get that bonus. You get 10% free withdrawal starting in year two, and the full contract value to the beneficiary, all included in this product at no fee. What you will find with some other products sometimes is there'll be a chargeback for interest earned, or there will be, some other hidden charges in there, or the bonus is not vested if they pass away. Ours is vested from day one or upon death. Now, if you surrender the policy, there is a vesting schedule. But upon death, that 110, and let's say they earn the 14.67, and they pass away in year two, that full amount goes to the beneficiaries. Is bigger always better, right? So I talked about some companies that'll offer you a much higher bonus, but is that always best for your client, or is the balanced product that I talked about? So let's look at an example of that. 100,000 again, non-qualified, age 64, female. Competitor carrier, same product, 10-year FIA, 13% bonus. So we're going to do the same thing here. We're going to allocate to their fixed rate account, which is at 3.3, and end of year one, they will have 116,729. Now, like we said, we move it into the S&P. That is their max and their cap. And the end of year two, they have 124,000. Same thing with year three. We still keep it on the S&P, and they have 132,000. Now, market gets a little bit volatile again. They're not too sure. And in year four, they say, I'm going to move my money into the fixed account again because I'm scared, market's not going to do anything. I think the market's going to return zero, and I want to get some return at least. So they go back into the fixed, and at the end of year four, they have 136,765. Now let's look at our product. 10% bonus, and you know what? They beat us year one. You can see that. We're at 114, they're at 116. But this is where the balance comes in, the balanced product. Let's look at year two. We have a 9% cap. A little bit less bonus, 9% cap though. Look at the end of year two. We just beat them by $600, but we beat them. Now, year three, same thing. 9% S&P cap. We're at 136,000 now, end of year three. And again, we're going back into the fixed account because we don't think the market's going to return anything. And now we're at 142,000 end of year four. So when you're looking at these bonuses, look at the caps, look at the fixed rate, and don't always just look at that bonus. Now, doing business with us, same day approvals up to 5 million, whether on a MIGA or an FIA. And I do those approvals. So if you have a case, you can call me, email me, we discuss it. and same day I will give you that approval. There's also no commission reduction or staggering up to 5 million. So I know when I worked at a previous carrier, if anything was above a million, they would start saying, "Oh, we'll pay you 50% of your commission. Thereafter, we'll pay you year 2 or year 3 because it's 5 million." We don't do that. We pay everything up to 5 million. Now, on our bonus product, you can use that to offset surrender with net loss up to 3%. So what does that mean? You can use the 10% bonus plus 3% net loss to do a policy rescue, and we'll get to that in a few minutes. On nonprofits, we can do cases up to 10 million, and I can do the approval same day or next day on up to 10 million for nonprofits. So if you work with nonprofits, if you work with credit unions, we've been seeing quite a bit of business from credit unions where the credit union themselves is buying our MIGAs. So if you work with anybody like that, contact me. I can do up to a 10 million approval. Now, I'm not sure how many of you are aware of 777 Reinsurance. They've been in the news lately. There's 777 Financial Company and then the 777 Re, which they own. We have no exposure to 777 Reinsurance. Just want to make sure. There are some carriers, not going to name them. You can go and do the research yourself. But 777 Reinsurance was downgraded from a minus to a C plus. So if you have clients that are exposed to those policies, you can always speak to us about that, and I'll talk about policy rescue in a minute. So the other thing that you need to look at is to review any policies written before 2021. So even I would say mid 21, I can still look at those. And that's because of the low interest environment that was there for so many years. Clients bought policies which had a cap, 3.5, fixed rates of 1.5, 1.75. And you have to remember the carriers that sold those policies had to buy the option for 10 years. They were expensive, and now they can't raise caps. What they're actually doing, they're lowering the cap even more on those policies. And so if you have any of those kind of clients, speak to us and we can see if we can help you on that. But that's all carriers. That's not just the 777 stuff. That's all the carriers. So let's look at policy review and rescue quickly using our products. So the dreaded call or email, right? How many of you got received the following call or email in the last few years? The market's not returning anything. I'm not happy about it. Oh, the S&P did 18% last year and I only got 3%. I allocated to the fixed account and it's only 1.75. I've heard those calls, and I've heard, agents calling me or sending me an email and saying, "Hey, you need to help me," because yes, I did get those calls. So how often do clients review their homeowners or car insurance? Every year. Why? Yeah, to find better rates, better products, and to save money. Now, how often do they review their annuity? Every year. Probably every month. Why? Because they want to see if their policy is performing, have their funds grown, but what if it has not? They want to find better rates, better product, and they want to grow their money. That's why they're in that policy. Now, if they do not see that growth, they are going to be upset. So let's see how we can help you. All I need from you to do a review is the accumulation value, the surrender value, including the MVA, 1 to 3 years of annual returns, whether that's the dollar or the percentage that has been returned. If you don't have that, that's not a game changer, but if I have, the more information I have, the better it is for us to do the review. And then just a call or an email to me, and it's either going to be approved, but we do deny the same day as well. So we're not going to approve every policy. If you have a 13% surrender plus an MVA of 1%, It's not going to happen. We don't have a product that can rescue that policy. But if it's lower than that, absolutely speak to me. So we do the review, you and I give you the approval on the case, give me the client's name, and I let home office know that there is a case coming by this date, and I have already reviewed and approved this transaction. So we do it prior to submitting the policy. Because what we don't want to happen is you submit it, client thinks they're going to get something, and now all of a sudden they don't, they can't get it approved. So let's have that conversation prior to submitting it. We will require a letter of instruction signed by you and the client. I have copies of letters of instruction, examples that I can send to you, and you can use that to put your LOI together to us, but we will need that signed by you and the client. We're not in the business of replacing all policies. We trust that you act in the best interest of your client, and Farmers will provide you with honest feedback. If we don't believe it's in the best interest of the client, we will decline. We're not in the business of replacing all policies. But if we find something that's going to benefit the client, yes, we can look at it. So let's look at a case example. Existing policy 10-year FIA written in 2020, S&P Cap 3, fixed rate 1.75. Count value is 203,678. Surrender value 187,439. That's including the MBA. Will we consider it? Yes, we will. Why? Because we do the Farmer Harvest 10-year FIA. The premium, like we said, is 187,439. That's the surrender value on the old policy. We do the 10% bonus, 18,743. Day one, your total account value is 206,182, which is higher than we had on the 203 account value here. So no problem there for us. Now, option for the client, right? Put everything into the fixed account year one, and at the end of year one, they will have 214,944 guaranteed. That is a better option for your client because their account value day one is higher, plus the 4.25, that gives them 214. Or they can split the funds between fixed account and indices, or allocate all funds to the indices. Now, their old cap was 3%, the new cap is 9. New fixed rate is 4.25, it was 1.75. So overall, everything here is better for the client. So this is a case that we will approve. And that's it from me. Any questions? Like I said, very simple, basic, easy for you to understand, but easy for the client to understand products. We have great service. Our turnaround times are very fast. We pick up the phone. You're not going to, call outside of the country. We do use a third-party administrator who is based in Duncan, Oklahoma. It's not offshore. You are going to speak to someone in the USA when you call. I pick up the phone. Joe picks up the phone. Even our CEO and president, Ben, will pick up the phone. You might even speak to him. We're not scared to talk to anybody. I just have to show you these disclosures. They will be on the recording, so if you want to read them, please read them. I have to give you the index disclosures as well. So I want to say thank you so much for your time today. I look forward to doing business with all of you. Like I said, and I will give you my telephone number now. I work with my cell phone mostly, so my cell phone number is 801-703-1449, and my email is rmehl@farmerslifeins.com. If you didn't get that information, the ladies at the home office have it, and they'll be able to provide you with it. So, are there any questions?
Alrighty, folks, if you have any questions, now's the time to send them in. I do have a couple here for you, Rudy. How long do rates typically hold for farmers? I know that you said they've been steady since October. What does the general time frame for that look like? They hold steady for 8 months to 10 months?
Yeah, so this one has been steady, like I said, since October, so it's been 7, 8 months. I had a call with Ben yesterday to go over rates. We're still holding right now. If you look at the treasuries, the 5, they've gone down in the 10. So we have to, just like everybody else, review. But the good thing is that you have that 60-day rate lock. So I had a call this morning. Someone wants to make sure they get to 5.8% for 5 years, but they only have their old policies only coming due or out of surrender on June 10. So I told them, just do the application, lock in the rate, and then on your application, just say, do not send 1035 paperwork to the releasing company until June 10th. That way, we have a 60-day rate lock. We can keep those rates for them.
Amazing. And then would you be able to explain a little bit more on that free withdrawal rider? Is that really only applicable when the rates are low?
Correct. On that MIGA, the 5% free withdrawal rider, not relevant right now, like I said. Do not include that because your client will be paying 10 bips for not needing it. So let them get their full 5.8%, for example, on the 5 year. It's only when rates go below 5%, if they would like 5%, then they would include that rider.
Wonderful. Another question here. Do you take in consideration to the benefit value if one was replacing an income rider product?
Yes, we will. We will look at it. That's a case by case. So if the client no longer needs that income rider, like I said, I have an LOI example. We will provide you to it. You can, work around that and do your calculations, and then we will consider it. Absolutely, yeah.
Excellent. And then would you be able to talk a little bit more about that policy rescue feature? Is this case by case, or what are the parameters for that?
Yeah, once again, case by case, right? So my client bought a FIA 3.5 years ago. Surrender is 7%. MBA 1%, so that's 8% surrender, for example, full surrender. So what can we do to offset? Let's use the 10% bonus product that offsets it. Even if it's a 10% surrender, which includes the MBA, the 10% offsets that. We still have a 3% net loss, and we can work with. But once again, case by case.
Excellent. And then I know you mentioned that some of your products write to 95. That is quite a good age. Is that all of your products?
No, it's just the 3 and 5 year MIGA up to age 95. The 7 and 10 year MIGA, we write that up to age 90. And on our FIA, they go up to age 85. Now, what I didn't show you was the 5 year MIGA. The 7 and 10, the 5 year FIA, the 7 and 10 year have the bonus, and the 5 year FIA, a lot of people don't like the longer product, so that's why we have a 5 year. It doesn't have a bonus, but what that means is you get the higher cap on that. So with the 5 year FIA, you get an 11% S&P cap and a 4.5 fixed rate. Because you don't have a bonus, you get that. Now, the 7 and 10 FIA also you can take it without the bonus and get the 11% cap and the 4.5. That's up to you and the client. But if you're, with a rescue, for example, you probably need to include the bonus. Then you get the 9 and 4.25. I will mention, you mentioned the age 95. So if you have a client that's 92 years old, they usually don't qualify or cannot get any long-term care, right? But they want their money to grow. That's when you can include that enhanced benefit rider for a 91-year-old, 92-year-old. That's going to cost them 10 bips. So they'll get a 5.7 return. But now all of a sudden they have to go into a facility. They want access to that money. Well, they go in there for 90 days. Now they can access that account. So just another way to look at it if they cannot get any long-term care or any other coverage. It's not a long-term care policy, but at least their money is growing and they'll have access if something happens.
Excellent. Well, thank you so much, Rudy. It looks like we are out of time today, folks. We really appreciate your time today, Rudy. Remember, with carrier partners like Farmers Life and NFI Solutions, your client's financial success is within reach. If you have any additional questions or need further guidance, don't hesitate to reach out to NFI at 952-887-1239. Thank you all again. Stay empowered, stay informed, and may you be successful in every endeavor. Thanks for joining us, and until next time, take care.